Hey, what's up guys, welcome back to another video on Twist Trade. And as you guys can see from the title, I'll be showing you guys a scalping and trading strategy that will help you to double your account in just under 1 week. And before we start this video, make sure to hit that like and subscribe button, and to also comment below what other strategies you want me to test. So anyways, for this video we'll be using a few indicators. First up will be your EMA indicator. So search in EMA, we'll be using the 200 EMA. So change the length to 200. For style, any style that you like is fine. I'm going to make it white in color and a bit of thickness. Next up will be a squeeze momentum indicator and your cumulative delta volume indicator. For this, you're going to change the squeeze momentum indicator. You're going to change the color tree to 0 opacity. Same thing for the color one, 0 opacity. And you want to remove the plot here. So the strategy is quite simple. When the squeeze momentum turns green and the cumulative delta is green, you want to enter a long position, and the price also must be above the 200 EMA. So to simplify things, basically when the price is above the 200 EMA, you want to look for long positions, and when price is below the 200 EMA, you want to look for short positions. And for a valid long position, your first green signal here is your buy signal, basically for you to enter a long position, and your first red signal here is your signal to enter a short position. So let me find a valid position for you guys. So here we have our first green signal here. Price is above the 200 EMA, so we are valid to go long here. We have our first green signal here, and then we must check the CDV indicator. For it to go long, the CDV must be green in color. So we'll enter this position right here where the CDV is green in color and the squeeze momentum just turned green. So our stop loss will be where the recent swing low is, and we'll take a 1.5:1. So now we gotta wait for another green signal to appear. So even though this is consecutive green signals, we will not take the same consecutive green signal again. Either a red signal must appear or there must be empty signals. So here we have a green signal on this candle to go long, but however, if we zoom in on our CDV indicator, you can see that it is red in color, so that is not valid to go long there. So now we gotta wait for another long signal. So right here we have a signal to go long, because we have the indicator of the squeeze momentum turning green, and we have a green signal on our CDV indicator. So we enter there. Stop loss will be right below the swing low. We'll take 1.5, but unfortunately that will be a loss, so we'll just move on to our next signal. So you can see here, although the squeeze momentum turned green and the price is above the 200 EMA, the CDV is red in color, so that's not a valid position. Same thing here, the CDV is red in color, so that's not a valid position. So now you can see that price is breaking below the 200 EMA, so we have a valid signal to go short. So you can see that it turns red here on this candle here, and price is just broke below 200 EMA, and if you look on the CDV indicator, it is red in color, so that's a valid entry right here. Stop loss will be right above the swing high, and we'll take a 1.5. So now we're going to look for more positions. You can see that price is right below the 200 EMA, so we got to look for positions to aim to go short. So the EMA basically filters where is the positions that you want to take. Here we have another position on this candle right here. We see that our indicator just turned red here. CDV turns red as well, and price is below the 200 EMA, so we'll take 1.5:1. Swing high is around here, so your stop loss will be right above, and just nice, we will enter an exit on this position. So here we have another signal to go short here. We have the red signal on the squeeze momentum, and we have a red signal on the CDV, and price is below the 200 EMA, so we enter a short there. Right above the swing high will be a stop loss, and we'll take a 1.5. And we'll exit the position right here. So let me backtest this strategy to show you guys. So I'm going to start testing it from right here. So I'm going to show you guys how I trade this and reasons why I take this trade. So I'm going to let it play. Now I'm going to be looking for short positions because price is below the 200 EMA. So we're gonna wait for a red signal. No red signal so far. Still no red signals, and here we have our first red signal. So let me zoom in on the chart. So we have a green signal still a green signal, and here we have our first red signal. So it meets our conditions because price is below the 200 EMA. A red signal appears and the CDV is red in color, so that's a valid short position. Stop loss will be right above the swing high, and we'll take 1.5. And that is a valid position and a win right there. So now we gotta wait for it to turn green again before it turns red. So let's wait for it to turn green. Now we gotta wait for a red position, a red signal basically, or it breaks above. So now we gotta wait for a red signal before it turns green again. So here we have a red signal, and now we're just gonna wait for it to turn green because price is above the 200 EMA. So we gotta be patient for this, and here we have our first green signal, and the CDV is green and price is above the 200 EMA. So stop loss will be right below, and we'll take 1.5 is the one. And unfortunately we'll be stopped out there. Almost hit our profit target here, but it's a very high volatile trade, so can't do anything about that. And here we have a valid position, so let me zoom back on the chart. So we have price breaking below the 200 EMA, and we have our first red signal on this candle here. CDV is green and price is below the 200 EMA, so that's a valid short position, and we'll enter right there, and that's another win. So far we have taken a few trades, so 1, 2, 3 trades, 4, 5, 6, 7. So out of 7 trades we have about 3 losses, if I'm not wrong. No, 2 losses and 5 wins, which is quite amazing since we are using a 1.5:1 risk to reward ratio, which is roughly about, let's say you're risking 10% on each trade, you'll be losing 20% because of the 2 trades, and we'll be gaining a 75% on the 5 trades, and that'll give you a net 55% gain on just, let's see how many trades we have here, on just 12 hours of trading time. But definitely, usually you don't want to risk 10% of your account because that is quite a huge margin, but basically you can double with using this strategy quite simply by just following the rules. So simply put, I'm just going to look at the EMA, whether it's above, price is above or below the EMA. Next up, if you're going short, make sure to wait for the signal to turn, the first signal to turn red, and look at the CDV for confirmation. Or when you're going long, the CDV for your squeeze momentum to turn green and your CDV to be green in color. So quite simple strategy. Hope you guys can use this strategy to profit, and you guys can test out on a paper account before you test it out with your real money, and just let me know the results in the comments below. So thank you guys for watching, and goodbye guys.